Good afternoon, everybody. Welcome to Trader Merlin Show. It is your Thursday edition, a bit of a special Thursday. I've been wanting to do this one, obviously, for about the past week, since news that Mr. Buffett was going to be stepping down. And I thought, you know what? I'm a fan. I definitely am a fan of Warren Buffett and all that he does. And I'm curious as to see what other people think of Mr. Buffett. I think it's hard not to respect a man who's been trading for so long and has such an impeccable track record. But I wanted to do a show called Warren Buffett, End of an Era. I've got a nice picture of here. That's, of course, AI generated of him sitting nice and smug in a big Barco lounge chair. I'm sure he's probably doing something similar to that right now, enjoying the fruits of his labor because he's been, I think, 1970 is when he, 1970 is when he said he bought his first stock. Yeah, I got some name of it there. But anyway, going way, way back in time. And I know a lot of the history, but I haven't studied Benjamin Graham's books and Warren Buffett like the Bible, like Larry Jacobson has. So I figured, why not bring on Larry Jacobson to talk about Mr. Buffett and all that he has to offer us and lessons, etc. So Larry, how you doing, my friend?
Doing great, Merlin. A little bummed out that he's stepping down, but it was destined. It was a matter of time, and I think after Charlie passed, he probably was rethinking things. So yeah, it's an interesting end of an era, so to speak.
The end of an era, but there's so many different things we can learn from it. And when I look back at I would say my collegiate days, a lot of what was taught to me back then, I think came right out of his playbook. So maybe we can start with some of the big takeaways from your perspective, kind of what is that Buffett blueprint and kind of framework that he built for his company, which I know you follow many of the pieces, not 100%, but certainly tailored to fit you. What were some of the big key takeaways for you with regards to Buffett's blueprint?
Well, he really kind of has 4 points that he manages. The first one is this a company you understand and would you want to own? So it starts off as we're not just trading, we're owners of a company because Buffett's outlook is long term. There's some stocks he's owned going on, God, I don't know how many years now, probably about 50 years. Definitely Coca-Cola has been 50 years. So he wants to buy into a company that is something he understands and he want to be an owner. Secondly, he likes what's called an economic moat. He wants to know the company has a good moat of competitive advantage. So even if someone were to join and want to enter into that, say, sector or industry, it'd be very hard to compete, with the companies that he likes because he looks at it more than just a company. He also looks at it what he calls mind share. So I'll give you an example. When he talks about mind share, when people start to use the name of the company in place of the product, that's mind share. So if you go to a restaurant and say, yeah, I'd like a burger, fries, and a Coke, well, it's not a Coke, it's a soda
Right.
or pop, as they call it in the Midwest, but they're calling it Coke. Hurry up, I got to sneeze. I need a Kleenex. I'm going to make a Xerox.
Right.
So when you start to get to that point where your name is synonymous with the product, you've got a really good competitive advantage.
Yeah, I Googled what those things were, like what I did there. See that? I
I
Googled
like
it.
that. See, very impressed. So his third thing is good management. He wants to know the company is well run. And when he buys a company, when he's not investing but buys in a company, he still wants those owners to stay on and run them. So basically, he's giving them the cash flow to do what they do best, which is run their company. And fourth was the thing he learned most importantly from Ben Graham, which is a concept called margin of safety, which has really been his underlying foundation all these years with some tweaks that he's done. But ultimately, what it comes down to is he's looking for companies that if you were to sell the company tomorrow piece by piece, and you get a total amount for the company and divide it by the outstanding shares the company has out there, that's how much a share of stock should be worth. That's its intrinsic value. So he's looking for companies that have a 25 to 50% discount from its intrinsic value, not the market value that people are buying in the open markets. So when you put those 4 things together, he's filtered out a lot of ways of saying, why would I like this company better? But he also has to balance it on something that none of us really have to do, which is when you're sitting on $347 billion of cash, you got to figure out what is going to be your next acquisition or things you're going to invest in that can move the needle. So as he's gotten more successful, it's gotten harder for Buffett to be able to perform the way he used to perform. And he used to joke and say, yeah, it'd be okay if we just had 50 billion. Now that makes me laugh, right? If we only
Yeah.
had 50 billion, because right now the company's $1.1 trillion market cap
Yeah.
as of Q1.
Well, we ran the numbers the other day because Bill Addis was, I think, if I remember correctly, Bill Addis said that Warren Buffett owns 5% of the U.S. Treasury market. And if you look, I think we calculated out, if he's got $347 billion and he's earning, 4% on that, he's earning roughly, $15 billion a year just in interest, 100% risk-free. It's like, God, what a nice problem to have.
I'll give you one better. I read that last year, just based on his Coca-Cola dividends, you ready? $million, not thousands, $1 million in dividends, bro. So think about making $775 million just on dividends of one stock.
Yeah,
So
we've had this conversation many times, though, Larry. Like, and I've had it with other guests as well. I like the concept of dividends, but to me, dividends are BS because you could get a 5% dividend, a 6% dividend, a 10% dividend, but your stock drops 40%, and I don't care if you got a dividend, you're losing. So dividends to me are a touchy subject.
you're right if it's not a Warren Buffett stock.
True. Well, let's be fair. He's also taken some big dingers. What was it? Comcast? He got hosed on one of them recently.
Paramount.
That's what it was. Yeah, Paramount.
Yeah, no, look, at the end of the day, what really this comes down to is, and Charlie Munger actually even said this. I saw an interview with Munger once who said, look, we're not that smart. But when Warren and I identified an opportunity, we weren't doing any of this diversification stuff. We were loading the truck up.
Yeah.
So when they found something that was too good to turn away from, they went in hard. Most people won't do that. And so that's how, when you're already buying at a 25 to 50% discount and the market drops, you're still buying it at below what you would even see during 2008 when it dropped. So to him, he's collecting dividends, but he hasn't really taken a loss in the conventional sense, maybe a loss of some profit, but he hasn't lost principal. And that's what really excited me about the way that he learned how to trade, is that he's buying things. And let's face it, it's truth, we've seen it, that investing over the longer term will do better than just trading. And so you and I have been doing this now, God, what is it, 10 years?
I would add a little asterisk there. Not will do better, but there's a much higher probability that it will do better, just because of the churning of accounts and commissions. And if you're trading actively trying to time those things, yes, I would certainly agree there. But I assure you, there are some traders who are eclipsing long-term rates of return.
Well, let's put it this way. It was a supposed meeting, alleged meeting, because I wasn't there, between Warren Buffett and Jeff Bezos. And Bezos, it was a great little tit for tat here. Bezos said, Warren, I don't get it. You're really good at this. Why wouldn't people just want to copy what you're doing? And Buffett simply replied, because once it did, it did.
Yeah.
I saw that with Trade Desk years ago, with Shopify, and now they're high flyers. So at this point, you have to kind of find companies. And the other thing that I forgot to mention with Buffett, he doesn't want something that's in the now. He wants to know this company is going to be viable 5 to 10 years from now. So he's always forward thinking. He's not thinking about what's happening today. He's even said, I'm happy if the stock market closed for a day, it wouldn't bother me.
Right.
So it really comes down to what made Buffett successful, I think, are two things. He had a set of rules and he never variated from those rules. Now, he might have changed some decision things up over time, but I think he's been incredibly consistent, and it shows in just what's going down. But then there's a whole nother piece now that really is the big question with Jeff Abel taking over. Will Abel have the acumen that Buffett does to be able to spot a business and analyze it the way that Buffett's been able to do so? I think a lot of that is gift as much as it is just knowledge. Buffett just has the type of mind that most people just don't possess.
Well, let me throw this one at you. And I think we all, through the media and other, news agencies, have this belief, this mindset that, Warren Buffett's just sitting in his ivory tower in his office, and he's scouring through numbers, and he says, "Oh, I'm going to buy into this." And personally, I highly doubt that. I'm under the assumption, and my belief would be that Warren Buffett has thousands of people working for him, crunching the numbers, meeting and analyzing, going out with the CEOs, the CFOs, the CIOs of all these companies, and digging deep, coming back and collectively getting together in big panels and saying, all right, what do we think here, 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 and here? Does this look good? And Warren Buffett puts his stamp of approval on the end, but I don't think he's doing any of the day-to-day stuff. He says, this is the philosophy for the company. Here's our strategy. We're going to take all your information you've gathered and put it in there. Would you say that's true?
It's an interesting question. I don't know because I haven't sit around. I know that their office doesn't have more than 30 people. So I think what tends to happen is Buffett and Munger used to probably get solicited a lot by companies because the people who were chosen, one, became very wealthy, and two, were funded by Berkshire Hathaway. And all I had to do was show up at work, be happy, and make money for the company, which is what they're going to do anyway because it's their company. I think what made Buffett unique is that he realized, unlike most companies back in the 50s, 60s, because let's face it, if you really want to know a number here, how's this? That Berkshire Hathaway is now a conglomerate of 189 businesses. So I don't even think he's investing as much as he used to, but I think his acquisitions have been powerful. 189 companies. For all intents and purposes, it's a successful conglomerate, unlike most companies. And here's why I think why. Number one, Buffett didn't ever think he knew better or how to run a particular company. I think his success and brains was convincing the people that are already running and making the company successful to stay on and pay them to continue to stay on.
Yeah.
And that, I think, when someone comes to you and says, I love your business, I'd like you to continue to run it, but I'm going to take the headaches from you. What business owner won't go, sure, and then have the opportunity to be funded by Berkshire Hathaway? So I think a lot of companies or a lot of territories, because of recent, Buffett and Abel were talking about their investments in Japan. So they're out there investing in Japanese companies and infrastructure right now because they believe there's enough growth in there to make it make sense.
Yeah.
So I think it comes down to that they're not, I don't think Buffett's actively out there going, what stock could I buy or company today? I think it just kind of gets into their radar. And I think some they've made great decisions on and others probably not so great.
Yeah.
And he probably has to then decide, does he want to own the business or does he want to be on the board and have a certain say based on how much percentage he owns of a business? But I think it was a very detailed list that him and Munger had. And there were a bunch of criteria that probably had to be there initially. And then they probably, talking to the company, decided how they could grow the business. And most of that, as you know, is due to an infusion of cash.
Yeah.
So if all of a sudden you have your business and you're making a few million, and all of a sudden somebody comes up and says, we're going to give you like a $50 billion infusion of cash, what could you do with that? That's where I think the beauty is. But what Buffett's also done is he's picked very smart people to run the divisions. So Ajit Jen, who runs insurance, brilliant guy. And what he's done to really increase the balance sheet in the world of both reinsurance and insurance has been phenomenal for Buffett and Berkshire Hathaway. I don't think they would have become the company they did without the floats they were getting from the insurance businesses.
Yeah. Interesting. The last one that I remember vividly, and I was watching this as it happened, was back here. I'll share everybody with it. This is Bank of America. And from 2006, Bank of America was up, right around $54. And this is obviously old school prices, split adjusted, etc. But it fell from $54 all the way down to a low price of around $2.48. And Warren Buffett, going back to what Larry talked about, you've got a company that he knows, right? He knows business. He knows banks. Banks aren't something brand new, some new technology. He knows banks, and Bank of America, originally called the Bank of Italy, by the way. Big bank there. It had, I don't know if it necessarily had an economic moat, but I would argue it was too big to fail. It was one of those ones that got bailed out, right? Got a protected Bank of America. You could make the argument it had good management and that margin of safety. Talked about 20 to 50% discount to its value. When Bank of America was falling like this, just plummeting, everyone thought that they were going to go bankrupt. And he knew better. He stepped in and he gave them billions of dollars. Not only did he get billions of dollars worth of shares, but he also negotiated warrants, which gave him the ability to purchase some at a higher price because he knew he was getting an amazing deal. And, this may go down, if you look at all the numbers, as one of his greatest deals ever, but I don't really hear many people talking about it. And fast forward to today, it's gone from that $2 mark up to $44. But remember, he had warrants, so he could buy a whole bunch more at discounted prices. And I think there's many other cases like this, but I remember in that financial crisis, I was day trading at the time, vividly watching that market as it came crashing down and hearing the news that Warren Buffett, bailed him out. Now, to the question here that Chad says maybe Buffett taught Congress how to trade too. Big Eb's right. His dad was a U.S. congressman, 4-term Republican for Nebraska. I don't know if he necessarily taught Republicans, but here's what I do know about Warren Buffett. There was
sorry to cut you off. Remember, his father was also a stockbroker.
Oh, well, the best of both worlds. You're a politician and a stockbroker before you had the no insider trading rules? Man, this segment's sponsored by Gatorade.
Sorry,
I'm just kidding. I love it. One thing that I think attributed to his success, and not to take away from his stellar 60-plus year track record, which is one of the best performance numbers in history, but to be honest, if I had the power and influence of a Berkshire Hathaway behind me, right? If I was running that kind of fund or running that kind of company, and everybody was hanging on my every word, Warren Buffett has clearly utilized this to his advantage. For example, when that play came along for Bank of America, he had already done the deal. Everything was going through, and then after everything was settled, then he went and made the announcement that that's going through. And that causes the public, the sheeple, if you will, to run to whatever he's talking about and buy into it. So he can use these, our huddled masses, if you will, from the Statue of Liberty to I guess, foment, to create an impression about something and then bring in a whole slew of buyers or sellers if he says he's selling something. And it's late. It's always quarterly late when they report it. So I think power of information.
That's intentional. So Buffett was able to negotiate with the powers that be that he does move markets, and he had an unfair competitive advantage that if people could find out the day he bought it, he wouldn't be able to keep contributing at discounted rates. So yes, they don't announce what Buffett buys or sells, similar to Congress, for a certain period of time. It's very fascinating to look at here. If you bring up the monthly chart of BRK period B, so I'm not even talking the A shares, from 1996 when they reverse split 50-1. Look at this growth over a matter of basically 20 years here, right?
I wish I had the sound effect for we go, hallelujah, hallelujah.
Look, it's parabolic. I mean, since COVID was that big pullback to about $160 a share, this thing has risen to over $500 a share. But imagine buying at $40 a share when it reverse split back in the day, back in 1996. So it's interesting because UBS Bank has called Berkshire Hathaway, ready, a safe haven during all the volatility that's about to hit.
You know what? I would. There's no doubt in my mind I would call Berkshire Hathaway a safe haven. Like, if you're looking for an opportunity and you think the markets are going to crash in a big way over the next 1, 2, 3 years, absolutely buy some Berkshire. They've got $347 billion in cash. And when you have situations, I saw it come in here earlier. Where was that one from Big Eb? He says maybe UNH is the new Bank of America opportunity. I did, by the way, sell puts today, Big Eb, on United Health, which is taking a flyer. I did the 250s, but we'll talk about that later. When you look at companies like United Health, I don't know if you've been watching that one, Larry. I mean, that thing
they're now having fraud.
Yeah. Yeah. I mean, just in the past 5 weeks, it's down 58%. But he could theoretically go in here and check and see if it's a good company, if he likes the management, check that intrinsic value, et cetera. And maybe, I doubt it. He does know healthcare, though. I'm sure they do.
Yeah. Well, it comes down to what is its intrinsic value right now? Does UNH deserve to be in the toilet right now, or is it an anomaly that Buffett learned from Ben Graham, his teacher? Sometimes the company is fine, but the stock is broken. And so Bezos has questioned that in the past. What you have to look at is if you're going to do this as an investment, make sure that this is a discounted opportunity, not a bad stock that's back to where it should be selling at. And that's where I see a lot of people just diving in. And we saw that, you saw that, like I did in the dot-com craze, where people were mortgaging their homes just so they can get these shares.
Yeah.
And then eventually everything toppled. And some of these companies are either out of business, as you know, or have never come back from the heights they were in the year 2000. And so I'm always looking for companies that I believe will be around in a long period of time. And then the fundamentals and everything else, including the chart, tells me if this is a good opportunity or not.
Let me before you go deeper in that rabbit hole, let me go back, because that was kind of the second big grouping here was because I know you don't follow everything that Buffett does, and I think that this is the interesting thing, for you and I as traders and as instructors at Trading Academy. We have styles that work for us. I know my style works for me. I have my ups and downs, but overall, long haul, my strategy works. So if I were to go into a classroom and I would teach that class, step 1, step 2, and teach every little piece that I do, and let's say I've got 30 students in the room, you're going to have 30 students go home, and no one is going to do it exactly the same way that I do, right? They are always kind of take things and modify a little bit. And I would assume that that's the same case here with you and Warren Buffett, is that you've pilfered some things from his style, and you say, well, I'll incorporate this into mine. So what are the big takeaways from Warren Buffett's style that you incorporate into yours?
Well, like I said, what I'm looking for right now is, and let's just use one recently that was an example, Texas Roadhouse. So, back in late 23, I started liking Texas Roadhouse around $80 a share.
That's just because you like to eat at Texas Roadhouse.
No, actually, I'll tell you the realistic reason. It was my stepkids. They wanted to go there, and it wasn't that popular in California. I don't see very many of them.
Mm-mm.
But when you went, the lines out the door. Yeah. Then you and I happened to be, where was it?
Charlotte, yeah.
It was lines out the door.
Multiple nights, by the way. And I've been to several other ones. It's always like a huge line out the door, and it's like, it ain't that special, but I mean, all right.
Well, to some people, it's a night out.
Yeah.
I mean, you got the music playing. Sometimes there are live bands. Sometimes there are dancers in there. And it has a theme bar. People like it. And for whatever reason, at that time, by my analysis, the stock should have been around $110, $120 a share. But it was selling at 80. So right there, you have to know how to identify the major trigger points. Like I'm looking at growth.
Right.
Year over year, but not just for 1 year, but for multiple years. I'm then using a discounted model to help me determine what should be the actual cost. And then I compare it to its competitors. And I'm also looking at it based on what it's done in its past in terms of its own numbers. And again, if the company is well run and they're making good amount of rate of return, like I like to see definitely over 10% a year for my return on income capital, investment capital. So I want to know that they're using the money they're getting from investors and they're growing that money and making the company more successful, but making their investors more successful as well. That's always been Buffett's idea.
Mm-hmm.
Buffett wants his shareholders to be happy. He wants to make them money. So to him, as much as this has been fascinating, what a game for him. I mean, imagine in a lifetime, you own a railroad, you own food companies, you own all these companies that as kids you would have killed for. I mean, imagine you going to a party and Merlin says, yes, I happen to own Fruit of the Loom. It's just fascinating the amount of companies and the diversification of industries they picked in, but also consider most of them are brick and mortar. He really doesn't have a ton of tech companies. He has some, but he's still more on the brick and mortar side. Yeah. So that's pretty fascinating when everybody else kind of left brick and mortar and had been more in the digital world.
Well, he's old, and to be fair, no offense to the elders in the group, but he's old. So, if you go back to one of his core things, you said companies that he knows about. I saw someone earlier post at, Bitcoin there. He doesn't understand Bitcoin. They don't understand that. That is so far beyond. It's like telling your grandparents, how to send a tweet, right? They're like, what? No, I just can pick up the phone in my house, which we don't have anymore. So outdated technologies was what he knew. He knew, maybe Microsoft, but he doesn't understand new technologies. And I'd be surprised if he'd be jumping on something like Nvidia because he doesn't really understand the new stuff. But I would assume that there's going to be a regime change, though, Larry, and as they go forward, especially sitting on $347 billion in cash, that they may look at some of these tech firms. Should there be a correction? Right now, we're not seeing much of a correction in tech. But if there is, I wouldn't be surprised to see them jump in. I mean, it took them forever to get into Apple. So
It did. And that's the point is that, but you can look at a guy and go, okay, so he still figured out how to make billions of dollars without some of these tech companies. In itself, that's pretty impressive. But yes, I think the reality of where Buffett and Munger always sat was intangibility and utility. And in their minds, crypto is purely speculative right now because they can't understand how to make money off of it other than somebody out there has to be willing to pay more for a coin than the person in front of them. And I think that's been a big of the hesitation is they're seeing it as this wild casino right now, but they're, like you said, other things starting to happen. And eventually, long after they're gone, because, I don't know how much longer Warren has. I hope a lot longer, but that's going to change. I mean, Charlie's already gone. So they're not going to see that utility, that tangibility in their lifetime. We don't even know how much longer it's going to take before I've heard you say 5 to 10 years. So it depends. And I think they're investing in things that they understand in the moment. They're able to quantify and they're able to measure potential growth because it's more than just the speculativeness of people wanting to buy something, hoping it's going to continue to keep going up. And you gave me the whole incentive of thinking where how many stocks did you wind up tracking in the late 90s that you said were the top .com companies?
in that hypothetical portfolio, I picked like 15 at the time were the A-listers at that time. And that was 1998 and 99. And I picked 15. And you're right. Out of those 15, only 2 of them survived.
Exactly. So I think, and you've said this many times, and I listen, is diversify the crypto because we don't know which one's going to wind up being the VHS. There's going to be a Betamax, a VHS, but there'll be one that, like every year, as long as it's not Sony's, it's going to work. Like I've come to realize that poor Sony.
Or a Microsoft product.
No, how about this? Poor Sony creates the Walkman, and then Steve Jobs steals the idea.
I know, love it.
Then they come up with the Betamax, which is great, and VHS comes along. Then they come up with high def and Blu-ray works. So what's the lesson here? Bet on anything that is not Sony.
I'm with you. I love it.
Right? It's kind of crazy. I feel bad for them. First to innovate, last to monetize.
There you go.
Their attention.
For those of you who are curious as to what might be in Warren Buffett's portfolio, there's an interesting website that I've used in the past called Guru Focus. They're always going to try to charge you and get you to pay for. Don't bother paying for anything. But you can see here, this goes back to December of last year, so we're definitely 1 quarter behind. You have to pay to get the updated stuff, but who cares? Apple, as of the end of the year, was a $66 billion position. That was his biggest allocation, was to Apple. Number 2 was American Express at $40 billion. Coca-Cola was $28 billion. Bank of America, $26 billion. You had Chevron, Occidental Petroleum, Moody's, which I thought was really interesting. And you had Kraft Heinz, people got to have food. You had Chubb, DaVita, Kroger, VeriSign, Visa. I don't know why he's got Sirius in here. I know we got Michael Anthony. I saw him pop in here. Michael Anthony was a Sirius guy. I don't know why he's got Sirius in his portfolio because that thing is a dog. But
remember, he turned the reins of investing over to 2 younger guys in the company. I haven't really heard much about them lately, but they're the ones that really pushed him on Apple. They're probably the ones that probably told him at the time Sirius was going to be a good investment. I agree.
It's still a huge thing. I mean, it's still $2 billion position in his portfolio. Of course, it's the biggest loser they have right now too.
Right. Well, you see, it all comes down to projection versus reality. So you've seen over the years, and the reality is when the ones that win, they win big. And they're ones that lose. And so the winners have tended to be bigger than the losers.
Yep.
So at the end of the day, all it comes down to is not how many winners or losers you have, but how much money you get to keep.
Yep.
And so I think Buffett, if you just think about his history, he started off by buying a failing textile company in Massachusetts. That was Berkshire Hathaway.
Hmm.
So it started, and that's when Charlie Munger really went to him and said, Warren, you got to change the way you're thinking, because why are you looking to buy okay companies at a good price instead of good companies at a fair price? So it's fascinating as of recent that the true architect of Berkshire Hathaway, and this came out of Buffett's mouth, not mine, was Charlie Munger.
Mm-hmm.
He credits Charlie with really being the brainchild of Berkshire Hathaway, where Buffett had all this knowledge and is great, but Charlie Munger was a big part of the success of that company over the last really more 50 years when he kind of came on as vice chairman.
Looking ahead to, I guess, the future, whatever that may hold. I guess kind of the question is it truly the end of an era? Do we see anybody that emulates what Warren Buffett and Charlie Munger had done, which, it's not a difficult model in my mind. You just have to really put in the legwork and figure things out and make sure you break down the numbers. But do you see it as kind of a dying breed? Do you see new people popping up that are following that philosophy, or is it just kind of fizzling out?
Well, I think it's a great strategy because it's never going to go out of style. It's just, it's not sexy to people.
Yeah.
And here's the crazy part. I'm going to give you five stocks, okay? Just five stocks
Okay.
that had you bought these five stocks at this time right now, I'll tell you how much it'd be worth today if you basically bought like 1,000 shares in each.
Okay.
First one that would have gone on my list all the way back would have been MasterCard, which I told you that story about, which was back around 2005. You couldn't give the stock away off the IPO. So that was one. Two was the horrific Facebook IPO. It was terrible. And if you just been patient and realized that the novices will chase price on the IPO and just wait for the banks and institutions to sell it down, you could have bought in the year 20, I want to say it's like
2012.
2002,
2012.
12,
Mm-hmm.
you could have wound up buying, yeah, it was 12, sorry, because that's when I left the company by the prior job. You could have bought it at around 23 to $25 a share. The would have, could have, should have. Next, in 2005, you could have bought Apple pre-split around $54 a share. And then the two most recents, obviously Nvidia, we went on in 2015 and we talked about buying it around $39 a share, and Shopify, which was at $50 a share. So those five alone, if you had bought 1,000 shares of each, you ready? You know how much they'd be worth today? $17 million.
Not on 1,000 shares.
Five
1,000 shares. 17 billion? No.
because of all the splits and everything that have happened. Remember,
Okay,
they've
I
all
guess, yeah.
split.
I guess, yeah,
10 to
yeah.
1 split on MasterCard. We had two splits on Apple, two splits on Nvidia. You had a split on Shopify. So these
Yeah,
splits add up.
yeah, they do.
And so as a result, think about that. But that's only five stocks.
Right.
So it made me start to think over and over again, maybe it's not about quantity, it's really about quality. And Roger Best, who I know you know very well, once said that to me in a very interesting way. He once said, Larry, quality over quantity will make you rich. Quantity over quality will make your broker rich. I never forgot that. And I think that's what Buffett's done is that Buffett came up with a series of rules and he never broke his rules. And as a result, he rode down, he got ridiculed around 2000 for not buying all those tech companies, and he wound up outsmarting them again. So his real money has come from Geico and the reinsurance business. That's where the big money has come from. That's been his profit centers. And right now, with the tariffs coming, it's going to be very interesting to see how and if it will impact Berkshire, because what first comes to mind is Geico and then BSNF, the railroad that he owns, right?
Yep.
And so if all of a sudden we see a break in the supply chain, that's going to hurt their bottom line. And Geico was down 14% in the first quarter. So it's still getting market share on Progressive. But as a result, I'm seeing right now the biggest problem is going to be you're so good, you've got this problem of sitting on a pile of cash you don't know what to do with.
Yeah.
And I don't know if he's going to find companies like he's been able to find, because that's going to talk about having to buy out some pretty big companies. So you'll be talking some pretty big numbers, so it'd have to be buying like a major company to be able to generate those kind of returns.
Right.
But even Buffett said at the shareholder meeting or when he was interviewed, he loves Tim Cook. He thinks Tim Cook is a brilliant guy. And so that's why I think he's got the confidence that he's got a Bill Gates on the Microsoft side, he's got a Tim Cook on the Apple side. So this would probably have become his kind of consiglieres in the world of technology.
I was
Probably
just
just
going to
ask him
say,
the
there was a
same
question that came through. Margaret says, "Why is Buffett friends with Bill Gates?" Look, it's funny. I made a commercial for Trading Academy, which we're not going to run, unfortunately. But
thing.
the commercial talks about baseball players hang out with baseball players, and chefs hang out with chefs. Bums hang out with bums. Who do you hang out with? If you want to be a trader, you should hang out with traders. So I would make the argument, Margaret, that whether Warren Buffett loved Bill Gates or despised him, there is definitely power to hanging out with other billionaires, because those billionaires are the movers and shakers, which are moving industries, whole industries, right? And if Warren Buffett could get some glimpse into that future side or see what Microsoft might be doing or other companies, I think that that was definitely in his best interest. So no surprise to me that he was rubbing elbows with all these billionaires.
It was an actual arranged meeting, to be honest with you.
What, they weren't
And
Indian.
no, they were not.
Sorry.
No, but he went over to the house at a recommendation. I think it was one of the parents that talked. Somehow or another, they got connected, and Buffett and Gates really hit it off. They would go on vacations as families together. Buffett and Susie would spend time with Melinda and Bill. They went to China together. So it wasn't just a convenience thing. They played bridge together. They were friends.
Yeah.
And to your point, I think that it also has something to bode with when you're kind of a Warren Buffett mind, you want to speak to other minds that are similar.
Yeah.
And let's face
Right.
it, Warren Buffett's not going to go to a local university and have a brain trust meeting with
Yeah.
a professor at a university. It's just not happening.
Yeah. Absolutely.
Yeah.
All right. So yeah, one of the pieces that Big Ed brought up, which is really important here, we've edified what Buffett and Munger and Berkshire Hathaway have done as far as investing in businesses and kind of the four tenements that Larry pointed out. One thing that I think should be, maybe an asterisk here is, yes, they were great at that, but they made, over the course of the last 60 years, hundreds of billions of dollars selling options. I mean, really, selling options is a monstrous part of Berkshire Hathaway's overall profit.
Absolutely. And he also got a special arrangement with the SEC too, that he could basically go out there and put years into a contract beyond just normal contract time or a price. So Buffett would do these crazy things like, yeah, I'll buy the S&P if it drops by this much, but he's making millions of dollars in premium
Right.
a year doing it. So yeah, Buffett was a very smart and astute man. And then he jumped into real estate with Berkshire Hathaway Properties after the housing bubble. So I think one of his statements that I think he's lived, actually, there's two of them that I think are really attributed to him. One is that everybody knows, be greedy when others are fearful, be fearful when others are greedy, meaning that he's always contrarian to what the popular investor is going to do. And secondly, he says, rule number one, don't lose money. Rule number two, never forget rule number one. So those have been his driving forces since he started. And by the way, just to be clear, he started with $10,000. Here's an interesting factoid. Had you started in his partnership in 1966,
I wasn't even
with
a biological organism at that point in time, bud. Come on.
I'm just saying, had you,
Oh, had I?
for this statistic, your $10,000 investment today would be worth over $500,000.
Yeah.
That's just on a $10,000 investment.
I hate shoulda,
So
coulda,
imagine,
wouldas, though. I
yeah,
the shoulda, coulda, woulda
again,
stuff. I just roll my eyes. Like, yeah. We know. If
but you
if
know
I
what?
just would have
You
bought
have,
$1 worth of Bitcoin in February of 2009, I'd be worth over $1 billion. I'm
correct,
not.
but he was. So that's the point, that a Buffett and other type of people that have a very different risk tolerance. And his other thing was he had high risk tolerance, but he had incredible patience. And that's what really differentiated him, that he would patiently wait for the trade to come to him. Now, it's been known he is a big fan of Ted Williams. And Ted Williams wrote The Art of Hitting, which has, in his book, Ted Williams drafting out every square of the batter's box statistically, that if he were to take a swing, what is the percentage average of him getting on base? So he's always been a numbers guy since he was younger. And one of my favorite stories was, and this is typical, and only a Buffett could figure this one out, even though it makes so much sense, that you know how he started a soda business when he was young. Do you know how he decided Coke over Pepsi?
No idea.
He would go to local barber shops and look in the garbage cans, see which had more lids.
There you go. I've
What I'm
always
saying, but you think about someone in their teen, like early 10 to 12 years old, and they're thinking like this. This is a brain, right? That most people at the age of 12, they're trying to figure out what cartoon to watch. This guy's figuring out how to make money.
yeah.
And so I would say that if anyone's really truly interested in his life, there's a great book called Snowball that was written by, I can't remember her name, but I want to
Alice
say,
Schroeder.
yeah, Schroeder. She was very tied to the hip and very influential in Washington. And so she wound up, like Catherine Graham, being very close to Buffett. And Catherine Graham, I think, used to proofread his annual reports every year. Go figure that. So it's a very fascinating story that in Buffett's world, it's starting off with a snowflake and turning it into one of the largest snowballs out there.
Yeah.
But it took a lot of work. And, even as interim as CEO of Solomon Brothers, I mean, who expects to do that in a lifetime, right?
Yeah.
To have to go in front of Congress. And because of your reputation, you basically saved a firm or at least prolonged its life a little bit longer. So, yeah, a
Well,
lot of
he
fascinating.
apparently he was rejected by Harvard. You know,
He was. But you know what? That was a beautiful thing. He wouldn't
yeah.
have been Warren Buffett if he went to Harvard.
No.
They, it was Ben Graham and Dave Dodd who turned him into Warren Buffett. So he would have been just anybody out there doing this and that, probably successful in his own right because he was smart nonetheless. But I'm just so happy he didn't go through Harvard's business school's ethics class because that's why he was successful.
Nice. Tell me a little bit. I know that you've done a lot with Strategic Investor Program and kind of incorporated in. To what extent is that program mimicking this? Not mimicking, but I know you've done a lot with Bashir and Scott McCormick and tailored kind of a custom approach. I'm just curious, kind of what elements does this bring into from Warren Buffett into Strategic Investor?
It doesn't. In fact, where that really is brought in is in Bashir's value investing focus
Okay.
class. So what we decided to do was actually kind of a meeting of the minds. Bashir had already been working on something like this, and I had just come back from Atlanta, right? Was studying with a guy that was teaching me the stuff of Buffett. And we kind of had a meeting of the minds, and there were certain things that I brought to the table that I said, you got to remember this. And he was like, but I want to use this. And I think it came out to be a really great course. So the course is kind of broken down into three parts. One, after learning the concept of value investing, you then would learn how to scan for the opportunities because they're even in a regular market, you're going to have scenarios where this happens. That's how I found Texas Roadhouse. Or there's going to be crashes like COVID that are temporary, or more long-term crashes that might be going shopping after, say, 2008 ended in the beginning of the 2009 bull market. So for me, the way I looked at this is you first got to learn how to scan for the opportunity. The second phase is going through all the fundamentals that you need to look at to determine, is this a company that would follow one of the four tenets of Buffett? We gave a worksheet to the students in that class. We give them links in the worksheet where to go out to the fundamentals in order to bring in that information. The worksheet will calculate the intrinsic value. And then phase three is taking it onto a chart and seeing if it's a good time to buy or sell. Now, I can take it a further step, which Bashir did, where maybe I can't afford to buy shares of stock, trade options instead. So you can trade a leap that could go out anywhere from a year to 2.5 years as if you own the stock. And then down the road, if you chose that you want to keep the stock, you can always convert through exercising your option into shares, and now you can continue to hold it indefinitely. So I think for anyone who's interested in learning this, and personally for me, this is my go-to, Merlin, after the next crash. It's like as soon as I know the all clear's there, I'm going to start going into stocks analyzing them, and I'm going to try to find anywhere from 3 to 5 stocks, and that'll be it.
And you do. I mean,
Just
you're constantly looking for new ones to add, but it's tough in a bull market to find something that's really well below its intrinsic value. That's a difficult thing. But we'll always get opportunities. Markets always have this ebb and flow, and at some point down the road, we'll get a pretty significant pullback. I mean, we had one earlier, but not a 50% drop like I've been wanting. But
Yeah, but you know what? It was great opportunity. In fact, there were three that I was able to find through value investing that created that opportunity because of that correction off of tariffs. And let's face it, the one thing that's kind of the elephant in the room to me, see if you agree with me, we are 3 weeks into a 6 week cycle of when the pain of the supply chain is going to hit the US. Already hit China, right? They're stopped shipping. People are losing their jobs. So as I remember back in COVID, and we lived through it, we started to see the shelf space go down. We started seeing costs go up. And regardless of what might transpire down the road, the damage has been done
yeah,
because there is nothing finalized yet.
right.
We already are going to feel the pinch of the shippers that are not coming to the port of LA, not coming to the port of Long Beach. They're already seeing 20 to 30% drops, which means it's going to then carry over into our economy and into jobs surrounding what
Yeah.
goes on with shipping.
Yeah, and
So
the data itself is so volatile and erratic. I mean, today we had our PPI number. They were expecting zero point 0.2, and all of a sudden we're at negative 0.5, and it's just ping pong balling up and down on all this data, whether it's GDP, retail sales, all that goody. Wild times, wild times.
yeah, and I think that there are opportunities that if the markets tend to sell off and it's a price you'd be willing to own the stock at anyway, own the stock.
Yeah, I agree.
I always tell students there's about a 3 year waiting period if you're going to do a value investing strategy. You got to give it at least time for the markets to catch back up and realize that that stock is relevant again. Now, notice I said stock and not company. The company's been fine. It's chugging away. It's making its money. It's making its revenues. It's just not in favor with Wall Street right now. And as soon as Wall Street gets wind of it again, then all of a sudden we start to see people buying it, and that drives the price up again. So I'm not opposed right now to even continuing to keep looking, but it has to be the right company, right price, and I have to be able to see that there is a future for this company. And that's why back when I was so crazy about Nvidia, and you and I often joke, it started because it was supposed to be the premier chip maker for driverless cars, and now look at it.
Yeah.
So that, to me, $100 stock selling at $39, Nvidia was the greatest definition that I've seen in the modern day of what would be a value investing type of stock.
Nice. What's your teaching schedule like, Larry? Where can my audience find you? I know you do a ton of different teaching around the world.
Oh, God. Okay, so I'm going to be in New Jersey teaching options next week. The following week, I'm in Scottsdale teaching strategic investor. So I'm actually going to teach that course. I teach it, periodically. That used to be the first thing I loved teaching. So I like coming out of retirement and teaching that course.
Retirement. You ain't no Buffett. You're not 94. You ain't retiring.
But you know what? I'm not doing as much strategic as I used to do. I'm doing more options these days. So to come back in and teach more strategic, I find it fun.
Yeah.
And I think the students enjoy it because most students don't realize it's probably the most important class they're going to take in their lives.
Absolutely.
I mean, how many times do you use a parallelogram now, Merlin? Right? Are you using your geometry all the time?
No.
Are you speaking Spanish every day?
I try. I live in Southern California, so I kind of need to.
Well, my point
But
being,
I do
why
like
they-
parallelograms and rectangles.
why-
I'm a geometry guy.
Why would they have taught us investing and money management back in high school? Because whatever.
Yeah.
So this class, to me, is the class that should have been taught in every high school. And once students take the class, it becomes their favorite class. And it's the most actionable class of all the classes that we do teach because people can take action off the information immediately.
Yeah.
That's why I really appreciate that class.
All right, so he's got New Jersey and Arizona coming up. He'll also do some XLT, so keep your eye on the XLT calendar. If you are an online trading academy, trading academy graduate, you can go to my OTA, go to the calendar. You can just type in Larry, and you'll see all of his upcoming teaching schedule in case you want to jump on some sessions there. All right, Larry. Well, hey, thank you very much. Appreciate you coming on. I know it's a bittersweet seeing Mr. Buffett step down, but he's still there for a little while. He's still going to be there for a little bit, but
I think you're going to see him at the annual meetings.
Yeah, of course.
Until he wants to slow down. I mean, that's the fun part for him now. He gets to go out there and receive the accolades. And I think as long as he's kind of still alive, I'm not
Kind
expecting
of
to
still
see.
alive. He's 94, man. I mean, he's doing pretty darn good.
I know as long as he's still alive, I think that people will still be okay with Berkshire. I'm hoping that people will see the company beyond just Warren and what they
Yeah.
built, and we're not going to get this 50% sell off if and when he
But
passes.
Larry, that's a good point. We've been hearing about this transition for years. This is not like, well, we snapped the fingers last week and it's now going to happen. This has been building and they've been talking about a successor for him for, I don't know, 5 years now, 6 years, even more.
Oh,
So,
they announced it in 2021.
okay.
He just never said, I'm stepping down.
Yeah.
And he waited to the last 5 minutes of the meeting to dump this on the shareholders. And they were actually voting on that later that afternoon with the board on the succession plan and when Abel was going to take over as of January of
I would
2026.
contend he's already been semi-retired for the last few years. But
Okay,
anyway,
yeah. I mean,
good for
look,
him.
I think it's been great because Abel came on in 2021 as vice chairman. Charlie was still around, but not as agile, let's put it there, in his 90s. And so Abel started to work closely with both of them. He's gotten a chance to be in the inner circle, but he actually managed the energy division of Berkshire. He came over with the company that Buffett bought, and he was so impressed by Greg Abel that he actually decided he was going to be the one that both Charlie and him tapped to run the company. So, you know what? I'm going to give them a chance. They're very different in their approach on certain things. And the big what if is, does Greg Abel have the ability, like anybody else, to be able to allocate and manage such a large cash pile?
Yeah.
Because the last thing you want is watching that cash pile start to go down and have people use it as an excuse. Well, Warren's no longer there, so the company's probably not going to do as well.
Yeah.
Best thing they can do is really pump Abel up and give him the tools he needs and give him a couple of victories, and I think people would be much
Yeah.
better off.
Yeah, he won't swing for the fences right away. It'll be a little bunt single and see what he comes up with. All right, man. Well, thank you, Larry. Appreciate it. Hope all is well out there in Indiana. Give my thoughts out to Dot. Hope you guys are doing fantastic, and I will, see you again soon. Are you coming out to California anytime soon? We have some Din Typhoon, or
I am. I'm going to see you in 2 weeks.
2 weeks.
Actually, no. I'm going to be in Irvine middle of the month. I'm going to be in Woodland Hills in a couple of weeks.
All right. Yeah, I
You're
don't.
welcome to come join me at Maury's.
You know what? It involves getting in a car and driving to LA. I would just assume cut off my big toe than drive to LA. I just don't like driving to LA. Sorry for everybody who lives in LA. It's just getting there is such a nightmare. California freeways are just atrociously bad, gridlock traffic, and everyone's on their phones and just, no thanks. But we'll do a Benihana. All right, Larry. Thank you, man. Have a good one. I'll talk to you later. All right, guys. That was
Have a good rest of your day.
You too. That was Dr. Larry Jacobson giving us some insights into Warren Buffett, the man, the myth, the legend, the legacy. No, as Brian asked, he has not passed away. He's not dead. Although, Warren Buffett, the kind of guy eating McDonald's and Cokes and Dairy Queen all the time, may not be that far away, but hopefully he'll live to be 200 years old. Good guy. And I do appreciate what he's given to the finance world as far as lessons and strategies and understanding valuation and long-term investing. To me, fantastic stuff. So that was Larry Jacobson. You can find out more information on him at tradingacademy.com. If you are a graduate, check your calendar. You can see what upcoming events he's got going on. He's always traveling around teaching somewhere. As you mentioned, he's going to be in New Jersey. He's going to be in Phoenix. He's going to be in Woodland Hills. He's going to be in Irvine. So he's got classes going on all over the place. All right, let me real quickly run through these top 8 here so I can get out of here. On the big downside, you had that 10-year yield drop sharply today. You had a 2.44% right as we came into these highs that were established back on April 11th. So kind of forming a little bit of a double top there, even though it didn't peak at the same rate interest rate. Still pretty ugly down day today. Closing, though, still at 4.431 for that 10-year yield. Now, crude oil also having a bit of an about face here, so I'm saying a little bit of a double top, down 2.42%. We came right up to that $64 level on Tuesday, and here we are now selling off a little bit more from that level. So I don't really, as I mentioned this, I don't really expect crude oil to have a giant run here. I do expect it to stay depressed and move down, particularly if we get that drill baby drill. But what's the base cost of oil? What's the cost to extract it? All right, dollar index, nothing really big here to speak of. It's still on a nice little uptrend over the past couple of weeks. As you can see, we bottomed out on April 21st. It's making higher highs, higher lows, so a pullback is natural, even though we had a hammer formation yesterday, as was pointed out. I think that was pointed out by Oliver yesterday, I think. Moving up our list, NASDAQ 100, nice little spinning top formation today. Again, right at the top end of that range I drew out for you guys, which goes back to the supply zone that goes to February 26th. We did not close above it. We're right at it today. You've had a phenomenal week going into a Friday. Do we get profit taking going into the weekend, or do we get a catalyst that keeps on moving to the upside? Bitcoin, boring. Nothing happened here with Bitcoin, really. 103,500 is where we're at right now for Bitcoin, so nothing shocking there. On our podium, S&P 500 was looking a little bit weaker today and then continued to move higher. Now, it is outside of that range of its price. I had a little box drawn there between 58.90 and 5,927. We are now at 5,933, so that would lead me to believe that we're onward and upward to the next above supply zone. Bought SPY puts at the close. There will be a rally. Let's see. Don't be so pessimistic, Big Ab. We might have a sell-off. We might. If we have a rally, then I'll end up losing the money on my put options, but I'm not too concerned about it. It wasn't a big position. All right, Russell 2000, fourth day in a row, banging its head on that overhead supply, which goes all the way back into March of this year, March 24th, and that's between 2105 and 2125. So a 20-point range right there for the Russell, but just can't seem to break it. Nice sign of weakness. And finally, gold. We had that breakdown yesterday below 3,200. Looked pretty bearish, and all of a sudden today comes ripping right back, looking rather positive. So, all in all, not a bad day for gold. Now, the UNH. So I did sell puts today on UNH. I sold the 250, so let me throw that out there. You know, this is one that's incredibly speculative, guys. This is really dangerous, but I live on the edge sometimes. So I sold the 250s expiring tomorrow. Ended up getting like $3.60, so about 1.5% for 2 days. I'm going to show you on a weekly time frame here just so we can see where that 250 mark lies. It's actually before you get to a pretty decent demand zone. So I'm a little bit before the demand zone there, but I don't think we're going to get down to 250 tomorrow. I mean, we did hit it today, by the way. We got to 248.88 on today's trading. But I did sell that, collected some premium. One day, literally be about 28 hours, maybe a little bit more than that is how long that trade will go on. We're at 278 in the after hour session. So if it drops $28 tomorrow, then I will be put my shares. I'm not too worried about that one right now. And as it stands, my only one that I have that's going to get away from me is SMCI. So I have SMCI. As you guys know, I sold the $37 strikes. That all my SMCI is going to disappear from me. So that'll be unfortunate. But it's already go. Rob says it already bounced up from demand zone below. Yes, Rob, it did. Yep, we had a nice bounce on UNH, which is why I jumped on it. If you look at that on a 5-minute basis, I just so happened to be watching UNH because it was one of the bigger losers today. And you guys can see it has a hammer formation. This is a hammer formation, guys. This is one of those hammer formations just like, oh, let's add volume on there. So you have, not only do you have a hammer formation, but you've got colossal volume that's well over normal. Normal volume for UNH is, maybe 6, 8, let's call it 8 million. I'll be generous and call it 10 million. That's the high end, would be 10 million, but just be generous. Today, you had 121 million shares traded. That's like 12 times its normal. And you have a hammer formation. This to me screams upside move tomorrow. So my only real regret here so far is that I didn't actually buy it outright and expect there to be a big bounce from that level. But here's why I bought it today, or sold the puts on it. If you go back to this morning, you'll notice, I'm going to zoom in here, we were selling off aggressively, and right at about 7:45 in the morning, that's Pacific time, by the way, you had a little hammer formation. Now, normally I don't look at hammers intraday, but it rallied up aggressively from there. So as it started rallying, I was like, you know what? I got these big green candles. I sold the 250s. And it was basically me expecting that hammer formation to act as demand. That's just what that picture told me. Now, I don't know if I'm out of the woods yet. We'll see. Fortunately for me, it just kept on drifting higher and higher into the close. So all looks good at this point. But again, anything could happen, and this thing could have a monster drop tomorrow. But I think I'll be okay. I did put not a tiny position in this one. This is actually a much bigger position. You're watching because UNH is a crime scene. Yeah, but again, I was watching because it was on the biggest losers list. I have a watch list that I bring up, and I look for big names. So let's see. This one's not edited out. For some reason, I couldn't edit it out. I don't know why. Let's so go down 10% or more. I also want to make sure that these guys have a custom price. So I put a custom price in here of at least 15. All right. So I want at least a $15 stock. And then add one more field here, which is volume. I want to make sure that whatever it is that I'm buying and selling has significant volume over a past specified period of time. In this case, I'm going to say, give me something that's got 2 million shares traded on average over the last 10 days. I hit apply. And now you can see here that United Health Group was on the biggest loser list. You had Dick's Sporting Goods. Those are the only two in here that I would have traded because I know the companies. I don't know Biohaven at all, plus the word bio in it tells me isn't gold at major support. I'll get that in just a second. So that's kind of how I came up with that one, and it just happened to be there at the time. Dick's Sporting Goods, if you look at the big picture here, let's go back to your daily time frame on this bad boy. It's not as dramatic in my opinion. Yes, it's fallen from 210 yesterday to 179 today, so down about 15%, but it's the bigger trend that on United Health Group that had me kind of interested. Michael says, isn't gold, are you talking GOLD, not actually gold, but you're talking the stock gold? No, I don't think gold, the stock, which is a CFD for gold, is at demand. I would go buy gold futures here. It already broke through that level of demand. So that yellow box you see there, in my opinion, irrelevant now. You may actually use that as supply going forward. So switch it around, and instead of it being demand, because it already broke through it and closed below it, then maybe we go here and draw another new supply zone, which would bring us to a supply zone on gold between 3,240, 3,270. All right, tomorrow. You've got nothing on the earnings calendar. I don't think you have any real economic data today. Of course, today's PPI number, very good. Also, retail sales numbers better than expected. So all in all, you had some positive sentiment out there. Friday, from economic perspective, as you can see, not a lot of big stuff going on, but you do have something from the housing with building permits and housing starts. You also have the University of Michigan Consumer Sentiment Report, which is expected to show consumer sentiment getting a little bit better. Right now, it's looking pretty dismal. Lowest point we've seen in quite some time. All right, that's it. I got to run, everybody. So if you have any questions, comments, things you want to know for tomorrow, email me at tradermerlin@gmail.com. It's on the screen there. I did not look at the YouTube channel today because it's been too busy. Threw my damn back out, which is a nightmare. The older you get, the more you just injure yourself for doing literally nothing. Literally nothing. Anyway, I'm going to go and throw some ice on my back and take some more Advil. But that said, I hope you guys enjoyed Larry today. I will see you tomorrow. Send in any comments, questions, because it's Friday, and I'm sure I'm going to have a glass of whiskey. I'll see you tomorrow.